Gold and silver markets in US dollar terms moved sideways this week. The gold price looks to be settling around $1,235 US dollars per troy ounce, while the silver spot price gained a few cents, closing just over $14.80 per troy ounce. In this episode, we'll blow some mathematical holes into the LBMA's ongoing transparency push, as well into the general Western world silver and gold price containment machinations, which, judging by the price data, have often been in effect from the 1980s up to today. And two, we'll cover a gold-related executive order signed by President Trump this week as the US Treasury continues sanctioning the Venezuelan regime headed by dictator Nicolas Maduro. We will be right back.
Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Welcome to this week's Metals and Markets Wrap. I'm your host, James Anderson of SD Bullion. Before we visit with our week's guest, I'd like to point your attention to an interesting story ongoing with the London Bullion Market Association's public relations push for market transparency. This week, the CEO of the LBMA, Ruth Crowell, had a 6-minute interview revolving around their recent Global Precious Metals Conference in Boston. I'm going to play it for you in full, but first, a few front-running comments. The two Bloomberg radio interviewers you're about to hear, they begin with somewhat silly tones. You'll hear a poorly landing joke attempt before Mrs. Crowell can get off her talking points. What gets lost in the fray is whatever she was going to say about palladium. For those who do not know, there has been a severely shrunken physical palladium supply over the years, one of the many reasons for record palladium prices throughout 2018. In the interview, Ms. Crowell mentions that for this year's conference, she literally brought physical gold bullion bars, stating there are many LBMA conference attendees who have worked their entire careers trading gold derivatives amongst one another, yet have never actually physically touched a gold bullion bar. Perhaps the disconnect is indeed real. This year's LBMA conference had 682 attendees. As a whole, they made bullish average gold price forecasts, calling for $1,585 an ounce gold by next year's LBMA conference in China, October 2019. Ms. Crowell also mentions that she actually visited a gold mine. No, not in Africa or South America, but in true Americana. And finally, the interviewers close with some standard mainstream financial media discouragement on gold's safe haven appeal. Have a listen.
Gold. The gold market seems to be making a comeback. Goldman Sachs said that there has been a rebound in, quote, fear-related demand for gold, with ETFs beginning to build after several months of declines. If you take a look, gold at $1,227 an ounce, highest level since mid-August. Here to tell us more about the precious metal and the industry is Ruth Crowell, Chief Executive of the London Bullion Market Association, and she joins us today from Boston, of course, home to Bloomberg 1061 Boston Newbury Port, where she is attending and hosting the LBA Global Precious Metals Conference. Ruth, thank you very much for being here. Tell us first about the conference. What is the design and what is the information that you're trying to get across with this meeting?
Well, thanks so much for having me. To tell you a little bit about the conference, we're now in our 19th year, and really this is an opportunity where the global gold market comes together, talks about challenges facing the industry, as well as a lot of business gets done in the outskirts of it. We also have a lot of discussion in terms of issues that are facing the industry, initiatives that are being launched, and of course, a lot of discussion about price outlook.
So is everything just silver?
Actually, there's been a lot of discussion about palladium.
No, I mean just in general. Like, do people actually bring the metals with them? I just imagine a conference. No, not so much. Okay.
No, actually, for this year, I've made a point of bringing actual gold because I was really struck by the amount of people who spent 30 years in the industry. They've never picked up a gold bar. So we had a 400-ounce gold bar here as well as a kilo bar here. Lots of opportunities to win small pieces. and even one booth giving away 24-karat gold charms. So this year, absolutely.
All right. Wow. It's that I'm sure was a huge attraction.
I get 400 ounces.
That's real. It's starting to talk about real gold there. So Ruth, you said there was a lot of conversation about the direction of prices. What was sort of the consensus?
Well, we do an annual price forecast, and I was just discussing one of the things I was really struck is how bullish the mood is. We've had the most bullish forecast since 2012, with the conference predicting 1585 as what the gold price will be at the next conference when we meet in Shenzhen in China.
What do they attribute this increase to 1585 from the present level of around 1225?
We have a lot of discussion about that, but really it's the macroeconomic outlook, ultimately talking about a lot of concerns. And whilst this is a worry for society, ultimately it is good news for gold.
So, Ruth, I noticed I was looking at the rundown and there was discussion of cryptocurrencies. Do people seem to believe that they would be uprooted and replaced by cryptocurrencies as a store of value asset?
Not at all. I was actually really struck last year, and that's continued in terms of how there seems to be a lot of interest from the gold space in crypto, which doesn't seem to make sense from the outset because you think this is, the world's oldest money, talking with the world's newest money. But the scarcity issues, the lack of government intervention, all of these really appeal. And what we're seeing a lot of is people looking at fully gold-backed cryptocurrencies. Certainly an enormous amount of these have been launched in China as well as within the West.
You've actually visited a gold mine recently, and I'm wondering if you could describe what it is like, particularly because of concerns about environmental issues and just the health of the people working in these mines.
Absolutely. I had my first opportunity to go to the Newmont facility in Cripple Creek in Colorado, and this really is a part of real Americana gold rush territory. And one, I think the biggest thing you're struck by is just the sheer scale of it. They're literally moving a mountain from here to a mile or so over, and how they're doing that is really incredible. But I think the other is just really the thought and dedication to the effect on certainly the environment, but really the community itself, and particularly in Victor, which kind of looks like it should be a movie set in terms of the Wild West. Those people are still living there, and when they have the shots, or this is when the explosives go off in the mine when they're digging the rock out, they have lots of announcements to the community to let them know. But I also thought in terms of thoughtfulness, there's quite an aging population. So they also make a point of calling them personally on the phone to make sure that they're doing that. And that's really a small thing. And obviously, in other jurisdictions like Africa and South America, there's different challenges. But I was really struck with the forethought as well as the small details that are looking at these issues.
Ruth Kroll, thank you so much for being with us. Ruth Kroll is Chief Executive of the London Bullion Market Association, who is in Boston today for this conference that I just imagine is decked out in gold and silver, but it evidently isn't just a couple of gold bars.
Well, a couple. One of them is 400 ounces.
I can't even fathom that. Have you?
That's very heavy.
Pam, you seem like the kind of guy who's held a lot of gold in his day.
Not 400 ounces, that's for sure.
It's interesting
and
because
never tarnishes.
Because everyone's gotten gold wrong, right? And it hasn't really behaved as a haven asset class, even during some of the turmoil. I mean, yesterday, for example, it ended the day down, even though you had seen so much turmoil and stocks ending down as well. And today it's continuing its slide.
Yes. Well, I mean, you're talking about gold. In April, it was about $1,300 an ounce. Now, $1,227 for an ounce of gold.
Welcome to this week's Metals and Markets Wrap. I'm your host, James Anderson of SD Bullion. With us this week is returning guest Louis Cammarosano of Smaulgld. Louis, thanks for coming on the show.
Thanks for having me back, James. How you doing?
I'm doing all right, man. It's good to have you back. We had a little pre-discussion before the interview, but I suppose the first topic we wanted to discuss was a little bit about the LBMA and just what's been going on there and just kind of the background on the LBMA, et cetera. I know you have a good amount of knowledge about it, so maybe we could start with that.
The LBMA, well, the LBMA it's not really the London version of the COMEX, but they trade person to person or entity to entity the gold. So you don't have the type of transparency that you have with at least the transparency you have with the COMEX, where you can actually see contracts traded. And I think there was a discussion that you wanted to play for us about what the market participants are thinking over at the LBMA on where they see the gold price heading it just a year from now. And it was pretty astonishing to see that they were looking at a 1585 price, which would reflect probably, off the top of my head, 25-30% price increase, which would be a nice gain. And we haven't seen those types of gains in gold in quite some time. And this is coming from the LBMA participants, which include many of the larger, there's mining companies involved, there's your bullion banks, there's bullion dealers involved, there's about 144 member companies, market makers, you got associates, and they're global. And this all happens out of London.
Mm-hmm. Correct. Yeah, the conference was in Boston this past week, and before the interview, before we're discussing this, I'm going to splice in that Bloomberg interview you just mentioned, and the topic of the various topics that were covered by the CEO of LBMA, Ruth Crowell. It was interesting. There were so many things in that interview that were interesting, and I think one of them was the fact that you had 682 attendees there this past week. And yeah, they have a bullish forecast for next year, October 2019, when they have a conference in China. Like you mentioned, they're forecasting on average 1,587 ounces of gold by that time next year. There was also some interesting things I noticed in that interview, and we had in the pre-interview talked about a little bit, but Ruth Crowell talks about in that interview how she literally brought physical gold bullion bars to the conference because there are people who've been in that LBMA, trading entity for their entire careers, and they've never held a physical gold bullion bar, which I found, absolutely astonishing. It just shows you the disconnect of what kind of is going on here with the physical versus derivative gold market.
Yeah, and it does show the disconnect, as you were talking about in the pre-interview, in that they're traders. They're not as interested as perhaps some of us who are interested in the physical metals to trade for 30 years and never having even seen or held the physical shows a tremendous disconnect. It's almost like they don't know what they're doing, but clearly they know what they're doing. They're trading paper contracts. They're trading digital gold, however you want to look at it. And it really doesn't bother them that that's what they're doing because their interest is doing exactly that. So they know exactly what they're doing. It's just that when they say it's the gold market, we have these visions of them sitting in front of pallets of gold and looking at the bars and then handing them over to somebody else. And that's not what's happening at all. They're arranging trades, and the gold is sitting somewhere in one of the LBMA London vaults somewhere, and their name gets put on it, and that's about it, and they never see it.
Yeah, I also found another point in that interview where she mentioned, and there's a whole lot of people and various news talking points right now in the industry about fully gold-backed cryptocurrencies. And, to me, it's like, I'm not sure that that's exactly what, maybe there's some entities that want that. But as far as individuals and who are buying the physical product versus having some type of derivative gold-backed cryptocurrency, I'm not really sure that's really even demanded, at least on the investor side. Perhaps some investors might not have a problem with that, but as far as people who are active and who are listening to this conversation, I don't really think that that's even a product that they would be interested in having. I mean, if anyone knows anything about Gresham's law, they would know that people don't spend their gold when there's fiat currencies that are devaluing, and you can spend those instead. So I'm not really sure the velocity of those cryptocurrency derivative gold back, whatever they come up with, is even going to be that high. I imagine people would maybe buy those and just hold them as a safe haven investment, I assume.
So I think you're right. The real advantage to the blockchain for the gold market is to keep track of all of these transactions. It's not necessarily to make it into a spendable commodity, although there will be elements of that. And I guess if you can buy your gold or silver as a store of value that you never intend to use it, what only thing it does, instead of you using it to that feature to spend it, when you go to sell it, you don't have to call up the broker, send them the packing slip, and then have it your gold transferred. You can do that online. So that there's a convenience element there, but I don't think it creates a demand factor for gold in the sense that you want to have it so you can spend it.
So the price of that convenience is counterparty risk, essentially.
Correct. Which you have also when you have your gold stored at a facility like Brinks or one of the other ones where you have to ask them to transfer it, and the transfer is more manual than electronic.
Right. Yes. Obviously, if they're doing what they actually claim, then there are people behind the scenes making those transfers.
Correct.
So moving on, that chart I sent you, it was a chart that to me, it still kind of blows me away. It's a chart from Gold Charts R Us, and I'll put it in the interview so people can see it, and as well in the article that I write about this interview. It's basically, it shows all the data from 1970 up to today, 2018. And that's all the data throughout the full fiat currency era, basically, of the gold price. It shows the LBMA, during their trading hours, what happens with the gold price versus the gold price outside of the LBMA's trading hours. And specifically, I was, just taken back by, the LBMA has been around since 1987. And there is an extremely tight correlation from the time that they started versus today in terms of where the gold price is, spot price, et cetera, versus where it would be if you had simply traded around the LBMA hours of, fix the LBMA AM fix and the LBMA PM fix. If you had just simply traded around them throughout this full fiat currency era, you're sitting at $13,000 an ounce gold. And on the other side of it, if you had traded within their hours, meaning you basically bought at the LBMA AM fix and sold at the LBMA PM fix, you'd be left with $3.30 an ounce. So, we could go into all the minutia and the details about the LBMA and how it works and all that stuff. And it's actually very complex. And I think the data, the chart itself is just so damning. I don't understand how you could even bother with anything else. This is just the flat out math of it. That it's just, it's amazing. And just one other point before, on the left-hand side, before the 1987 LBMA start, you can see the bull market from 1970 to 1980. And it was really a Western-led bull market. Back then you didn't really have China or Russia involved, especially not in the derivatives. So it's just very interesting, the correlation between now the Eastern side of the world is really the one that's propelling the gold price, whereas the Western side of the world seems to be the one that's intervening and trying to keep it contained.
Well, that's definitely true. Even though you've had the Shanghai Gold Exchange increasing volumes since 2008, both in gold and silver, they do not have any real influence over the price yet. Even though now we're seeing a lot of the physical gold shifting, not just in central banks, but also consumers buying gold in the East. You have China, you have India, all the Eastern countries adding gold, including Russia. And you don't see that type of accumulation. Whereas in the West, either in the consumer side or on the central bank side, in fact, if you look at the top acquirers of gold, central banks, just until recently, none of the Western central banks were adding gold for decades. And indeed, Switzerland sold 60% of their gold when they joined the IMF in the early 2000s. United Kingdom sold a good portion of their gold. Brown's bottom in the early 2000s. Then you look at Germany, sells about 4 or 5 tons a year. They don't add any gold. All the talk about Western gold has been repatriating gold, but not really adding it. The Netherlands repatriated the gold, but they didn't add any. And now you're starting to see, we saw Poland and Hungary add gold, and it was the first time in a long time for Poland. I think the first time that Hungary brought its gold reserves up to where they were since 1946. What we're seeing now in the East, Mongolia, Kyrgyzstan, Kazakhstan, Russia, China, India, both on the central bank side and also on the consumer side, really creating a floor for the demand for physical gold, because the Western gold demand is far less now, and also a lot of it is based on ETF products, not the physical bullion buying that you're seeing in China and India. And also the jewelry buying is much larger in the East. They buy 18 karat, 22 karat gold jewelry. Whereas in the West, if you go to England, the United States, you cheapen a lot of the gold. They'll sell you 10 karat gold, and people don't know the difference, don't really care. But so there's definitely a greater demand for the gold back east. And I think you had a statistic on China on the gold bars. I think it came out of the World Gold Council. You want to share that with our listeners?
Yeah, they came out and talked about China's gold through Q3 in 2018. The demand for gold in China is up 28%. And if you look at Western ETF flows, it basically, there's been a lot of selling of gold ETFs in the West this year. Obviously, when the price goes down, there's a lot of people who sell off their gold ETF because it's perhaps not performing as well as they'd like. But when that happens, there's physical withdrawals that happen a lot of times. So you see essentially physical gold flows coming out of the ETFs. And if you just look at the way where they flow, especially through Switzerland, pretty much all that physical is going to the east, whether it be Hong Kong, China, India, as you had mentioned, or various satellite, Shanghai satellite countries, perhaps, who are building up their gold reserves, maybe in the future to trade with China or other counterparties in that side of the world.
Right now, the off point for a lot of that gold is Switzerland, and then you have to trace it from Switzerland. From there, it's easy to trace it to the east.
Yeah, and so one other thing I wanted to mention is that this chart that we're looking at with the LBMA gold price, there's the Nick Lard has a great website, goldchartsrus.com. We use a lot of it in our analysis here. He doesn't have an LBMA chart for the silver price. What he does have is a New York chart for the silver price throughout the entire fiat currency era. So it's essentially, I'll put it in the video right now so you can see it. Basically, what it shows is essentially the same type of thing, where if you had traded around the New York trading for silver, if you had traded around it throughout the entire full fiat currency era, you'd be sitting around $75 an ounce silver. Whereas had you traded within the New York time, meaning that you bought when New York opened and you sold when New York closed throughout the full fiat currency era, you'd literally be sitting at 1930s depression prices, talking about something like 37 cents an ounce for silver if you had traded within the New York hours. So again, you can speculate all you'd like about how this is happening, who's doing what, et cetera, but the flat out math of it is damning. It is flat out, just look at the chart. That basically tells you what you need to know.
Yeah, and I point out that the COMEX, if you do a similar analysis for both gold and silver, it's pretty much the same.
Yeah, and we had discussed, $75 an ounce silver. That's, to me, is not a bubble. That to me is probably the appropriate price for silver. It's obviously at $14 an ounce. There's a lot of people who think it's great value, and they're buying it at the moment and saving it for the long term. So this is not, triple digit $1,000 an ounce silver. This is not some hyperbolic idea. $75 an ounce silver, I think, makes sense in the grand scheme of finance. I think it's.
Well, the way you get there is you take your gold price, and the gold price would be higher, but for what you're seeing, and then you do the same thing over on the silver markets, and there would be still a big spread between the gold price and the silver price, except the gold price would be $5,000-$6,000.
Yeah, correct. The ratio would probably tighten a lot lower than it is right now. Correct. I think we're at
83,
just over 80. Yeah, we'd probably be back near the 50 or 40s or 30 level. And by the way, people out there, the 2011 low for the gold silver ratio, I think, was 33.
Yep,
so This is not out of the realm of possibility. This is something we could certainly see in the next decade.
Well, when you get those silver spikes, that's what happens. The ratio really starts to narrow.
Yeah.
But you get long periods in between where the average since one thing people don't realize about the gold-silver ratio, you really can't analyze it from 1933 to 1974 for two reasons. United States citizens were not allowed to own gold, and the price of gold was fixed at $35 an ounce by an act of Congress, the Gold Act of 1934. So the gold price wasn't allowed to move. Once the gold price was allowed to move in 74, they immediately came out with the COMEX. So both gold and silver were then both subject to the same paper trading. But when that happened, you saw that you have, since 1974, more of an average gold-silver ratio of about 50 to 1.
Yes. Yeah. And again, that's a ratio that has happened throughout those two charts we just discussed. So that's a ratio that has happened for a long time. And so I totally agree. It's something that can last for longer, but it is in a contrived market, I would argue. A lot of this is.
They're both live market, but here's the difference. Silver is easier to contrive because it's smaller. So you can expect it not to go as high if they want to keep the prices down because it doesn't take as much effort to knock the silver price down as it does to knock the gold price down.
No doubt. If you're going to try and keep the precious metals markets contained, silver would be the number one target. It would be the easiest and the one that you would have to control if you were going to try and control precious metal prices, or at least contain them in a reasonable manner. If you put it in perspective of the full fiat currency system that we've lived under, most of our lifetimes. So,
and hence those dives that you saw. The 1981 was clearly them shutting off the system to silver buying in 1980 on the COMEX during the Hunts brothers, and clearly the smash down in April 2011 was the same thing, went from 50 to 43 in about 2 seconds, and then straight down after that.
My main takeaway is the LBMA is going to talk about being more transparent, I think, on November 20th. Get ready to be underwhelmed. It's not going to be transparent. It's going to be half truths again, like they normally do. So just be forewarned when you see all those headlines that you're probably going to be reading gobbledygook.
Yeah, I've tried to get so much information on where the vaults are, how much are in the vaults. There's general information, who's trading what. In an OTC, you really can't get that type of transparency anyway, but they're going to try to pretend like they're being transparent. It's just like the Fed has made an effort to be more transparent, but obviously we don't have an audit of the Fed really for people to look at.
Right.
And you don't get the same type of transparency that you would expect, let's say, from a public company. So they'll show you a little bit under the kimono, so to speak, but I don't think you're going to see trading records and things of that nature.
So it's more or less PR. It's just basically lip service, and the truth of the matter is much deeper and much more complex.
Key word is, they like to say we're transparent. If you're transparent, somehow that means you're good.
Right.
Even if you're committing all types of unspeakable crimes, as long as you have the word transparent in your documents, they could say, look, it's all transparent.
Yeah, it's a buzzword totally right now. That word, it falls flat on its face when you go into the details. All right, so moving on, I think we wanted to touch on another interesting event that happened this week. We had the President of the United States, he signed an executive order basically banning anyone from doing business with Venezuela in terms of the gold market. We published it on Silver Doctors outright. So if you want to go read the full executive order, you can find it on silverdoctors.com. But, it's a 4-page document, and a couple of interesting things about it. I think first one is the word gold is mentioned only one time, but the entire thing revolves around trying to squelch illegal gold mining in Venezuela or funding that is propping up the Maduro regime. And, right now, I think Venezuela has been exporting gold. I think last year they may have exported about $1 billion, just under $1 billion worth of gold that they had mined in their country over to Turkey. I think that's where they're now refining it. They don't want to be refining it in Switzerland because they're afraid it'll be confiscated. So they're using Turkey as their gold refinery at the moment. And so, I wonder what your thoughts are on that executive order.
They want to clamp down on that. Now, the problem is, it's the same thing when you try to prevent individuals from trading in gold. We saw that with the FDR executive order in 1933. They tried to ban it. And now you're seeing the United States trying to, through its international pressure and its dominion over its own citizens, saying don't trade with Venezuela in terms of gold. But now they have to put pressure on Turkey. And, are they going to put a blockade? And don't put it past, it wouldn't be just for gold. I mean, Nikki Haley briefly hinted at this a year or so ago about Venezuela. I mean, they could put a blockade on Venezuela and inspect the ships as they come in and out of Venezuela. However, there's a thing now called air travel. So it's the same, they can fly the gold out. So who knows? The idea, I think, is more symbolic. And it also, because I don't think the United States does a tremendous gold trade with Venezuela. There may be some gold smuggling with some unscrupulous companies, like we saw a while back. That company was getting the gold in from think it was Central America or South America into Ohio. But there is a much bigger, and there was an oil dealings with the United States. But what this highlights to me is that gold is a functioning currency when the traditional or currently used currency, the dollar, is unavailable or you're prohibited from using it. And it's the same for individuals and it's the same for countries. And it runs into the issue is how do you stop people from transacting? You could boot them off the SWIFT system, but you can't stop them really from transacting. And once they try to think they control the gold market, well, if you have these digital gold contracts or you have cryptocurrencies, it's somewhat hard to stop countries, even with sanctions. At least with individuals, you can threaten them with jail time, fines. It's a little harder when you've already got sanctions on a country, to threaten them even more, other than with an invasion. And I'll put it past that. But generally, once you're on sanctions or or your foreign aid has been revoked, those countries are going to do what they're going to have to do to transact.
I think it's a deeper, discussion. I think about how Nicolas Maduro is somehow staying in power. I mean, the question of how is he even, obviously he's ruling through violence, or the threat of violence. How is he keeping, the people who are protecting him fat and happy, essentially? If you go down the rabbit hole of Venezuelan gold mining, you'll find out that for a long time, for many years after they kicked Crystal X out and various gold Canadian companies that were going to essentially mine there, they kicked those people out. And, there was a big lawsuit. I think Crystal X won. And so now Crystal X is trying to figure out a way to redeem some of the fines that they placed on Venezuela. And that's another completely different topic, but it's very large. But the point, I think, is that after they kicked out all the people who know how to mine gold, they basically, local gangs essentially started mining gold like a wildcat mining system, basically. And I think what happened was Nicolas Maduro was like, look, military, you can go take over those gold mines and then extract some wealth from the gold before it comes to us, and then we export it to Turkey. So it keeps some of those military personnel fat and happy, and it gets a lot of those other gangs that were formerly mining in those mine shafts killed. There's been a lot of murders there. A lot of the military has basically killed off their competitors who are trying to mine gold along with them. So it's a very dark subject. It's a lot of quote unquote blood gold, I guess, is what people would talk about, but that doesn't even scratch the surface of how the Maduro regime is staying in power. $1 billion of gold exports is nothing. It's really a question of, they're mainly revolving around oil, and then B, the other story about how their fiat currency system works is something that's unbelievable, and we could discuss that if you want.
Well, I think that gets into the weeds a bit about how they have two separate exchange rates. I think the big takeaway is how Maduro stays in power is what you pointed out is you have to find a way of paying your henchmen, your people you count on to protect yourself in power. And as long as you can do that, that's what happens. You have your inner circle, they live fat and happy, and then you have your security guards, whether they're the military or whatever internal security group you have, as long as they feel that they have a vested interest in keeping Maduro in power because they're getting fed, they're getting paid, they're not starving. That's how they stay in power. It's not so much on the basis whether they believe in socialism or the cause. They believe in getting paid and they believe in being fed. And especially when they see what the alternative is, if they're not part of the oppression, then they're going to be the oppressed. Not to use the socialist terms, but that's exactly, I'm sure, how they look at it, is that they really don't have any other choice. And they're picking the choice that best suits their needs and their families. And so whatever Maduro does, whether it's currency manipulation, black market blood gold, oil for yuan, or his cryptocurrency, he's going to skim off the top. And if there's inflation, people are going to benefit from that inflation, the ones who get the pesos or the dollars, whatever it is first, and they're going to be all right, and everyone else isn't. Now, that's how he stays in power. That solves his problem. That doesn't solve Venezuela's problem.
Yeah, and nor does it solve the problem of Brazil or Colombia, who now have 1 million people leaving Venezuela and coming and flooding into their countries. There's a lot of speculation out there now with the change of president in Brazil being more of a right-wing type of president, that maybe he's going to turn and do some type of clamping down on the influx of refugees coming in from Venezuela. But that'll remain. It's hard to say what's going to occur there. But you would imagine that Colombia and Brazil are going to have to get together and figure out a way to stop the amount of people who are flooding into their countries, because that's obviously going to build out a lot of crime, because these people are coming to these countries without any employment at all. So what are they going to be doing? They're probably going to be working in the gray market, essentially.
It's not a good situation. And, some of those, they think some of those migrants end up in Central America, and they could join caravans and head to the U.S. as well.
Yeah, there's no doubt. I would imagine some of those people in that politicized caravan are probably Venezuelan, because they essentially walk up all the way through Colombia, through Panama, all the way up, basically.
They might have a better asylum claim.
Yeah, they may if they could get through. But this whole caravan thing is like it's just a huge political. It's a thing that I don't even want to discuss. Really, what I wanted to talk about here is you have a 2 exchange rate system in Venezuela. You have the government's exchange rate, and then you have a black market exchange rate. And I'm going to link in the notes of this video one of the most crazy stories about Venezuela, and just trying to understand how Maduro is financing his henchmen and staying in power. It basically talks about how there's 2 different rates of the bolivar versus the US dollar, and how insiders in the Venezuelan regime are able to multiply their US dollars or their bolivar exchange rate by 14 times to 1. You're talking about just crazy amounts of dollars that are of overall purchasing power that's being stolen from oil sales and just the general population of Venezuela. It's a September article from the Miami Herald, and it's involving a $1.2 billion money laundering case. The details are very sordid and complex, but essentially what you have here is a fiat currency system that has gone completely masked. The mask has come off, and basically the insiders of this fiat currency system are making huge amounts of money while the regular population is being starved.
Now, you could argue that all fiat currency systems are abusive, but here's a case where it's hyper abusive, because
Right.
the issuer, whoever's closest to the issuer, gets the benefit of the assigned value of the fiat currency. But in this case, it's clear that there's 2 assigned values. There's the one with the lower exchange rate and one with the higher exchange rate, and only the insiders get the better exchange rate.
Yeah. So this is happening real time, and it's doing it on steroids. So if you want to understand how fiat currency systems benefit insiders and how under those systems, you end up having a disparity of wealth. This is Exhibit A, at least, going on right now in 2018, this side of the world.
And that's why, bringing it back to precious metals, when you talk about the difference between fiat currencies, is this highlights that no one controls. They may control the price of gold relative to fiat, but if you have an ounce of gold, no one can take that ounce away from you or diminish its value other than by the increase of gold or silver on the market based on new mining supply. That's the only way it can be inflated. A government can't inflate the gold or silver supply. They could try to do it synthetically through paper contracts, but they cannot increase the supply of gold or silver other than through intense mining operations, whereas with a push of a button, a fiat currency issuer can issue as much or as little of that currency as they so desire.
Yeah, indeed. So it's basically one is cannot go to zero, the others always do. So and in the long term, but this one is just it's amazing, the story about the laundering of money that's happening in Venezuela between the 2 exchange rates. So I definitely encourage listeners to go find that link and read that story, because it's eye-opening.
And keep that in mind when you think about fiat currencies, because if they could do it, any country who hits China, for example, when they have internal issues, if they can get themselves out of their internal issues, domestic issues, by printing money, they will. The United States did. The Federal Reserve had an issue. What was the response? Not let's do some free market Austrian economics, let's have creative destruction. They said, no, we're going to save our system, and we're going to put stimulus, and we're going to do QE, and we're going to bring interest rates to zero. And that's the power of having the fiat currency. And if they had to print $4 trillion, That's what they'll do. And that's what China will do if it has to. And that's what Venezuela's doing. But on a much more, you look at it and you say, well, that's outrageous. But it's just a greater degree of abuse of the monetary system.
Yeah, it's just happening faster and without a mask and sophistication, basically.
Correct.
Well, Louis, man, I appreciate you coming on this week. Were there any? Let me give you a plug at least. Let people know how to find you so they can listen to your work. You do a lot of videos on YouTube, a lot of really good analysis on the gold and silver markets and other cryptocurrencies, et cetera. So let listeners know how they can find you.
Well, thank you, James. I have a website, Smaulgld.com, where I keep all of my writing, work, and charts. And then every night around 8 or 9 o'clock on YouTube, I do a live stream, which then also gets posted to BitChute and then back to Smaulgld.com. And we cover pretty much 90% of the time gold, silver, and economics, occasionally some cryptocurrencies, and only politics when it impacts the markets directly. So please check it out, Smaulgld.com and Smaulgld on YouTube and BitChute.
All right, Louis, thanks for coming on this week. And listeners, thanks for tuning in.